I get a ton of questions from new business owners wondering how the heck their business income is taxed. The answer to that depends on what type of entity your business is set up as. Today, I'm talking to my partnerships out there. I'll define what a partnership is, how to report your income for tax purposes, and how much you can expect to pay once it's time to pay those taxes. So if you set up your business with at least one other person, so 2 or more people, and you did not make an election to be a corporation, or you did not file an election to be taxed as an S corporation, then your entity type for the purposes of the IRS is going to default to a partnership. A partnership is required to file a separate tax return known as a 1065. The 1065 is a reporting tool that reports all of your business income and all of your business expenses for your partnership. However, a partnership itself does not pay taxes. What it does instead is issues what is called a K-1 to each partner, who then reports that income on their individual tax returns. The information from the K-1 that the partner gets will then go on page 2 of Schedule E of your 1040. That gets a little complicated, right? You're like, where does it go? Don't worry, if you have a tax advisor or you use a tax software, it should help you get all the information into the right place. As a partner who receives that K-1 from a partnership, there are going to be a ton of boxes on that K-1 with a bunch of different information that needs to go into your tax return. We're not going to go into all that detail, but I am going to focus on the main 2 boxes that most of your income should come through at. So the 2 boxes that are most commonly used are your ordinary business income, which is box 1 of your K-1, and then box 4, which is your guaranteed payments. So those are the 2 boxes we're going to focus on today. Again, you guys, a K-1 is much more complex than just those 2 boxes. So please, I highly suggest that if you're using a tax software to do your own tax return, that if it doesn't make sense or you're not confident you're putting things on the right place, that's a flag that it's time to hire a tax professional to help you. Because I am a CPA, but I am not your CPA. So this is just general information to help guide you in the right direction. So box 1 that I've mentioned is your ordinary business income. And that is your portion of the business's net income, okay, which is the business income, the gross receipts, less your business expenses, okay, that equals your net income. And let's say you're in a partnership with one other person and you're 50-50 partners, okay, then your K-1 ordinary income is only going to show your 50% of net income from the business. All right, let's use numbers for an example. Let's say you had business income of $100,000. You had business expenses of $50,000, so your net taxable income to the partnership as a whole, the whole business, $50,000, all right? But you're a 50-50 partner. So you and your partner each are gonna report half of that money, or half of that income, which is $25,000. So your K-1, box 1, is gonna show just that, $25,000. And that is the indication that that is your portion of the business income to report on your individual 1040. So box 4 of your K-1 is for what's called guaranteed payments. Now, this may or may not apply to you, all right? But if you are doing work within the partnership as a partner and you are getting money for those services, regardless of what kind of profits the partnership produces, those are considered guaranteed payments. They're almost like a salary, right? It's money in exchange for your services. That is reported separately from that ordinary income because it is a deduction to your business, but it's going to be income to you as the partner. So again, example, if I am the partner within the business that is doing most of the work, I have another silent partner that's just an investor, okay? And we've decided that that work I'm doing is worth $50,000 a year, okay? I'm going to receive a guaranteed payment from the partnership of $50,000 for the services I'm providing, regardless of whether the business has a loss or makes $1 million, right? Those profits are a different item. All right, so that guaranteed payment comes to me regardless because it's in exchange for the service I'm providing. All right, and that is not something that's in proportion, right? It's my money for my services rendered. So like we said at the very beginning, the partnership itself, the business itself does not pay taxes. All right, that's what that K-1 is used for, to report to the partner how much income, how much in guaranteed payments they're required to file on their personal tax return. Okay, so I'm a partner, I receive a K-1, I put it into the tax return, my personal tax return. What does that mean? All right, well, if I am a general partner, and again, consult your tax advisor, but if I'm a general partner and I have ordinary income, that's that box 1, that number plus any guaranteed payments I received, remember box 4, those numbers are all going to go into my ordinary income and be taxed as earned ordinary income on my 1040. From there, on your personal tax return as a partner, that income is taxed at whatever your marginal tax rate is. So marginal tax rate, we hear tax bracket, what tax bracket are you in? So that's what we talk about when we talk about income tax brackets and marginal tax rates. So for the sake of this conversation, okay, we're going to be simple. We're going to say all of our business income is taxed at 22%. That's the most common tax bracket out there. All right, we will have a training in a couple of weeks all about marginal tax brackets and dive into detail there. But for now, let's keep it simple. So we are in the 22% tax bracket, and let's say we have ordinary income, box 1 of $10,000, and we received guaranteed payments of $50,000. That means we have $60,000 from our partnership to us as partners that needs to be taxed as ordinary income to us. So the $60,000 we have in ordinary income, if that's all the income we have for the year, then our income tax that we pay on $60,000 is going to be $13,200. It's important to remember though, you guys, that income from the partnership goes into the bucket along with any other income we have. So if we have W-2 wages from our spouse, that goes into the bucket. Maybe we have another business that we started that has a small loss. That goes into the bucket. So it's just a bucket of income from all those different sources that partnership income goes into. So it's not all by itself. So it's important not to forget about self-employment tax. You guys, this is something that gets overlooked a lot when people are trying to calculate how much tax they're going to owe on the income from their partnership. And it's so important because self-employment tax, you guys, is another 16% of whatever your portion of the income is from your partnership, from your business. So what this means, you guys, is all of our guaranteed payments, they're always going to be subject to self-employment tax. There's no exceptions to that. When it comes to our ordinary income, that's our box 1. Okay, if we're a general partner, that's going to be ordinary income. If we're a limited partner, it's going to be taxed differently. You're going to want to talk to a tax advisor, but for the sake of this video, we're going to assume it's all ordinary income, right? All earned income. Therefore, it's all subject to that self-employment tax. So I'm going to make numbers a little easier. Let's say between the two boxes, we have $100,000 this year in ordinary income from our partnership. That means we're going to pay self-employment tax of $16,000, and we're going to pay that $22,000 or 22% in income tax. So we're looking at $38,000 in taxes on that $100,000. All right, and I know I'm going to get a lot of comments on, but there's deductions, there's the standard deduction, there's itemized deductions, there's deductions for kids. We're not getting into the details of that right now. Right now, we're just focusing on that top line, simple business, those business figures. Let's talk about when your partnership has a loss, right? Sometimes that happens. You have investments or you have businesses that have a loss for a year. Hello, COVID. This happened to a lot of us. When that happens, when there is a business loss, there is no self-employment tax on your ordinary income because there is no income. If you had guaranteed payments still, you're going to have self-employment tax on that. But if you didn't have guaranteed payments and you have a business loss, no self-employment tax. And the nice thing about your business losses, because they fall into that bucket with all your other income, if you have a loss from your partnership, it's going to be able to reduce the taxable income from your other sources of income. So if you have W-2 wages, like I said, if you have another partnership or another business that maybe had income, that those losses from a business will be able to reduce that taxable income down, therefore reducing your tax liability for the year. So partnerships can get very complicated when we talk about taxes, but what's important to pick up from this, you guys, is that separate tax return, right? The 1065, that is a reporting device. The partnership itself does not pay tax. The tax liability is reported to you as the partner through a K-1 that you then issue on your 1040 with all of your other income, and it's taxed at both your income tax rate, that marginal tax rate, and is subject to self-employment tax. If you guys have any questions about what we talked about today, go ahead and leave a comment below. And then I highly, highly suggest you head on over to our Facebook community, Money, Taxes, and Finance for Small Business, because these topics are what we talk about on a regular basis and have live trainings on every week. You can access that group by clicking the link in the description box. Thanks for watching. If you found this video helpful, please give it a thumbs up, subscribe, and while you're loving on me hard, go ahead and hit the notification bell so you never miss a future video.